Let's take the conversation forward, slightly longish time frame, and somebody who's been the face of the new generation investor here in India. She's also heading Edelweiss Mutual Fund, which is the youngest mutual fund, but she's built it from the scratch to what it is today. And today she's joining us to discuss a very interesting piece of research which Radhika Gupta's team have put out. She says that the next 10 years are going to be very meaningful for corporate India, and that would be reflected in the markets. So any investor who's operating in whatever capacity, big, large, small, should not waste this opportunity. The research tries to make you a conscious investor that it is something which you should not take lightly, this opportunity of the next decade. Radhika, good afternoon. Thank you very much for your time. Very interesting note and the research which you've set out. Talk to us about what's so special which you see. What are those factors which are coming together which makes this decade a very potentially very good decades for corporate India, for macros, and it will be getting reflected in markets as well. So we should not take it lightly as an investor.
Hi, Ajay. Great to talk to you. As people who are participating in markets, finally, markets are an outcome of corporate profitability and of what the economy is going to deliver. And I think as people, we spend a lot of time talking about short-term markets, but really what we are investing in when we're investing in funds is investing in India and India's decade. Now, as we see the decade, it is a very special one. I think we are making the migration from this $2,500 GDP per capita to $5,000 GDP per capita, when your basic consumption needs as an individual are done and you move on to investments and discretionary consumption. Incidentally, China made this migration, Ajay, in 2008. And I always joke the coincidence between both times is both had an Apple store opening at that period. But China made this migration between 2008, and I think they saw the economy expand meaningfully. That is what we are likely to see. And the expansion that we're going to see in India is going to be multi-sectoral and multi-cap based also. We are benefiting today in India. We have a young population. You said I represent the young investor, but I'm very optimistic on young India. We are in the middle of a demographic dividend that's going to last us another 20, 30 years, with a 70% young and working population that is becoming more aspirational and more independent. And the more we can leverage this young population, both as a consumer and as a producer, the better we'll be as a country. So the point of GDP per capita, the fact that we have a young consumer, and finally, I think if you look at bottom up what the corporate sector wants and top down what we are seeing in terms of policy, I think they are finally aligning for this country in a beautiful way. So historically, for instance, we've only been a services driven economy, leaders in IT services. But today, a segment like manufacturing is really taking off with something like PLI, and we have the potential to be a giant in this space. So I think these three things are really coming together for India, which is some of what that report captures.
Radhika, there's also a very interesting plate in your report which says that sometimes when we look at India, it is actually, the numbers are so huge. We have 12 crore people who have $12,000 per capita. So when we average it around 2,000, 2,500 for India, actually we are masking a lot of information. And this so Indian households are getting richer. Such a big population, 12 crore people are already 12,000 crore plus in per capita. What kind of consumption trends are we talking about? The categories which are likely to do very well over the next few years.
So absolutely, I think if you look at the day-to-day lives, if you look at the people consuming, iPhones, if you look at the people, and if you look at restaurant sales, if you look at travel, it doesn't reflect the reality of an economy that's $2,500 per capita GDP. And as I always say, this 12 crore or 120 million people, Ajay, they make up half the economy. And by the way, this is going to double. This rich India is going to double. We are 120 million upper and middle income households that will go to 200 million in the next 7 to 8 years. Now, these are the people who are really going to enjoy premium consumption. And premium consumption is in so many segments. A prominent auto company just moved from basic bikes to premium bikes with a prominent, global brand. If you look at something like home building, the real estate sector is reviving. People want better homes. Now, 10 years ago, nobody cared about how they did their bathrooms. Today, people spend money on homes, they spend money on a bathroom, they spend money on eating better, living better. I just saw statistics today that if you look at the number of flyers that India has, airport flyers, it's where China was maybe 4 or 5 years ago. So many segments of premium consumption are going to be at play. The other big trend that is happening in India, Ajay, is also nuclearization. You're moving from joint families to nuclear families, where younger generations are taking control. That will also drive a movement towards premiumization.
What about the digital end of the economy? How is that driving? Or what kind of trends are we likely to see there? Because that is also expanding at a phenomenal pace.
In fact, India today, I think, has the largest number of social media users in the world. And what has happened is there has been a lot of formalization of the economy that has happened over the last 4 or 5 years between things like Aadhaar, between things like UPI. The digital economy really is at the center. And, now you have something like ONDC, which is really expanding the potential that so many SMEs have. You have a whole movement around financialization that is digital. So credit is just accessible to so many more people. So I think the digital economy is bringing access, it's bringing efficiency, and it's spreading the story actually in some way from India to Bharat as well.
Saw that, and talking of technology, how can we not talk about how technology is being leveraged to expand the gamut of credit? I was looking at another data point, MSME accounting for 30% of GDP. Large part of them did not have access to formal credit, and hence they had to go to loan sharks, etc. That is likely to change the entire landscape as well. There is a lot of listed companies who are working around that. Talk to us about how leverage and technology are marrying wonderfully to ensure people have access to credit.
Firstly, you have to realize India is a significantly under-levered country. If you look at our level of household leverage or household leverage and even corporate leverage, I mean, credit to GDP in India is about 55%. That's substantially less than most parts of the world. And all parts of the country need leverage. Your households need leverage, your MSMEs need leverage, your corporate needs leverage. Incidentally, your health of NBFCs and banks also, Ajay, we have to talk about that, is in the best of shape despite all the, stress going around globally, especially in terms of banking over the last year. So both these parts are in good shape. I think technology is playing the role in providing access. In fact, I was reading a report yesterday that said if you look at the financial services revenue pool, fintech is expected to be about 10 to 15% of it now.
Radhika, sometimes we all are culprit to it. We focus so much on near-term, short-term, here and now, that we forget such amazing, powerful themes are unfolding in front of our eyes, right in front of in our country. For example, in the last 5 years, we saw Ukraine war coming in. We saw slowdown impacting India. We also saw COVID, however short-lived, and thankfully it was. But even then, Nifty 50 EPS from FY19 of 480 rupees to now 24, almost 1,000 rupees, almost doubled in the last 4 years. And this is the massive Nifty 50. If you go lower, then you would see much more powerful earnings momentum take place. What are your thoughts on corporate India's earnings? And sometimes we underappreciate it because we only see it in a short term. But when we see it on a period of phased manner, 2 to 3 year, 4 year, 5 year, that momentum is pretty powerful.
I think in all this talk of markets and valuations, we forget that India is actually coming off an earnings low and the earnings season is surprising you positively. Now, a couple of things are happening. As I said, the last decade was a little bit of a lost decade, but you're finally seeing meaningful double-digit EPS, for our indices. you are seeing corporate balance sheets in good shape, and you are seeing corporate ROEs also expand. So all this bodes very well. The other thing is that if you talk to, I mean, I've always been a big believer in the spirit of Indian entrepreneurship. The magic of this country is the animal instincts of the private sector really coming together. If you look at private sector India, we are at 76% capacity utilization, which is a little bit of a record. The other part of earnings, I would say, Ajay, is that historically, when you looked at the markets, one or two segments participated in earnings. I mean, we always had conversations about consumption, but if you look at today's earnings profile, your financial services sector, your whole manufacturing sector, your capital goods companies are showing order books, are showing earnings resilience. And I think that is what we are excited about, that it's broad-based earnings resilience.
I also want you to throw light on when we approach the market. Sometimes we get, analyzing the market purely on large cap, mid caps, small cap, micro cap is not a good strategy. In fact, there are many times you would see industry leaders which are themselves housed in small cap or micro cap because the category itself has not, grown, or it does have a big future ahead. So what should be the right approach when we are doing a portfolio construction as an investor?
So I think our definition of mid small has to change. Ajay, in 1998, the size of a large cap company was 3,000 crores on average. Today a small cap company is 12,000 crores in size. So one mid and small cap companies are not truly small companies. The average mid cap company is $4-5 billion in size. Secondly, I think your market leaders in financials and IT are present in large caps. But if you want a market leader in a China plus one theme, in a chemicals theme, in a capital goods theme, it's present in the mid cap universe. Now, if you want a market leader in the capital goods theme or the diagnostics theme, it is present in the small cap universe. So I don't think the portfolio for a future India can only be a large cap centric portfolio, which is what they used to be. I think the portfolio is going to be a lot more balanced. It can't be a fully mid and small cap portfolio perhaps, but it probably will be an equal weighted portfolio of large, mid and small. As I say, the Indian opportunity is truly multi-sectoral and multi-cap in nature.
Outstanding, Radhika. Always enjoy our conversations. Thank you very much for your time today.
Thank you.